Hello traders and good afternoon. I hope you're all having a great day. Just sending this short video out to wrap up today's markets and just give you an understanding of what I'm currently looking at in the market for new trades moving forward. So traders, we are holding the CAD Swiss franc and the CAD JPY, which are in a profit at the moment. We're not seeing the CAD climb as high as I want it to against these two currencies at the moment, and that would be said because of the trade war fears between China and the US still has some room to maybe escalate as Trump is imposing, I think, 35 billion worth of tariffs on China set to kick in on Friday. So I know the markets are still holding the safe haven demand for yen and Swiss franc government bonds, because they are waiting to see if the Chinese retaliate or how this could escalate further should that really rattle Beijing in terms of them wanting to implement similar tariffs on US goods. And it could get ugly with Trump really seeming like he's ready for a trade war to try to get America's deficit down with China. So traders, we know that's a safe haven demand into the Swiss franc and into the Japanese yen. If these trade war fears do continue to subside and fade away, then we will see the yen and the Swiss franc weaken, because simply enough, traders, with low inflation, low interest rates for the both currencies, we know that there's no reason for investors to hold either currency long term, especially while interest rates in the United States are going up and predicted to go up, especially for the UK, predominantly to, next month at the Bank of England's interest rate decision, and potentially this month for the Canadian dollar. So this is the reason why, traders, we're holding the CAD into Friday's employment data, which is really important. As we know, the Bank of Canada has been coming out recently saying and signaling to the market that they're quite adamant that they want to be raising rates because they don't want inflation to overshoot their 2% target. And what they were saying for their reason for whether they're going to be raising interest rates is because their forecast for unemployment could continue to fall lower than it currently is at the moment. And as we know, traders, as unemployment falls in an economy, there's a shortage of workers because more people are in work. Businesses have to compete with each other for the remaining amount of workers, and by competing, they're offering higher wages. So people's spending capacity in the economy increases. Then businesses are going to offset the cost of paying higher wages by raising prices on the shop floor. And this double whammy of spending driving up prices and then businesses raising prices as well to cover their cost of paying higher wages means that price inflation really starts to rise. And then of course the central bank, trying to maintain inflation at their target, is going to raise interest rates. So traders, at the moment, unemployment in Canada is 5.8%. But if we start to see a leg below this level and say unemployment drops to 5.7, 5.6, it just shows that more people are going into work. Wages are going to continue to start to rise. Inflation is going to continue to rise. And this is what the Bank of Canada is saying and why they're signaling that they're going to be looking to raise interest rates fairly soon. And markets are predicting that maybe this will be this month on the 12th of July. So very interesting times for the Canadian dollar coming up. So this is the reason why we're buying the CAD against the Swiss franc and the yen. I do expect the CAD to continue to climb. And also we made a great profit for CAD New Zealand dollar this week, and potentially, traders, we could have another opportunity to resell this currency pair should Friday's data be very strong. If we get a break back below 0.88500, this could signal a really good break for us, and we could take the trade down to 0.8700. Because remember, traders, when interest rates are going up in the country, markets price this in by 5% for the currency. So by the time it gets to there, that'll be around 5% priced in. So we still have some room to move to the downside. So that could be a really good trade for us, traders, for the Canadian dollar against the New Zealand dollar. Again, if we can re-enter. And also, traders, USD CAD means that the Canadian dollar would have a lot of room to increase in value. So that would be around 5%, which would be around here, the support level down here, traders. So we'd have a good opportunity to sell against the US dollar should the markets get very bullish for the Canadian dollar, and then we can make a great trade from around these current levels, which is offering at least 350 pips. So that's a really good profit target for us to try to reach. So this will be looking at on Friday should the data be strong. And then moving on to the pound, traders. So today, PMI data came out very strong, and I did explain in the analyst channel, traders, we've had really strong construction data, PMI manufacturing data, and services data. Now, these are the indicators that central banks use to measure forward-looking growth in an economy. So you look at services. So services are the services that are predominantly sold in an economy. So remember, traders, an economy has now moved away from more physical goods into more services. So banking sectors, it could be services that are sold in an economy, and services is a major part of the economy. So when services are showing that it's increasing in value in terms of the reading is showing a strong growth in services, it's showing that the economy is expanding and is expected to continue to expand. And then we had manufacturing that makes up 20% of the economy is continuing to expand. And we had construction, so that construction of new buildings, new offices, new homes in the economy is expanding also. So this is all pointing to the slow growth that we saw in the first quarter of 2018 in the United Kingdom, which is why the Bank of England didn't hike interest rates in May. Now we must remember, traders, let's have a look at the pound. And let's have a look at the pound USD for an example. This is really interesting for you guys to understand, traders. So in early parts of the year, traders, markets were expecting a rate hike from the Bank of England. So this is why on the back end of 2017, early 2018, markets were really buying the pound higher because they were expecting a lot of rate hikes. Remember, traders, UK inflation was very high at 3% because of the Brexit vote that really caused inflation to spike higher. So when the pound devalued by over 20%, that means that businesses in the UK who were importing goods and services into the United Kingdom found themselves with a pound that was 20% less valuable, and this made their import prices go up. And of course, for businesses to keep their profit margins, they raised their prices on the shop floor, and this caused inflation to rapidly rise from, I think it was 0.5% in 2016 up to 3% by 2017. And this is why in 2017, the Bank of England for the first time around September times hiked interest rates, and they were saying to the market they're going to continue to raise interest rates until they get inflation back down to 2%. So then we came into 2018, markets were expecting a rate hike, but then we had surprisingly inflation drop from 3% down to 2.7% or 2.6%, I remember. And then we had really poor economic growth. Wages were kind of subdued. They wasn't picking up as fast as the markets were expecting, because we must remember in the United Kingdom, traders, unemployment is at 4.2%. So 96% of the economy is working or in work, earning money. And this is why the Bank of England is saying now that they expect wages to start to drive up inflation even higher. But the reason why the pound got sold off in May was because wages were subdued around May. They wasn't picking up as fast as they expected. Inflation was falling, so there was less pressure on the Bank of England to hike interest rates. And then the economy was really slow in the first quarter of the year. The first 3 months of the year 2018, performance-wise, it only grew by 0.2%. It was the worst performing economy out of the G10 economies. So the G10 economies are the 10 biggest economies in the world, and the UK was at the bottom of the pile. But it was really down to really bad weather, such as the Bank of England said. So then when the markets realized that a rate hike wasn't happening in May, traders, the market sold off the pound and devalued it, because they realized all the buying that they had been doing was for no reason, because there wasn't going to be a rate hike. And this is something for you to really understand, traders, that markets are always trying to price in expectations of what's going to happen in the future. And then the market had to reprice the pound, sell it off. We made some good profits trading the pound when it was getting sold off. And now, traders, now that construction PMI has been strong, manufacturing PMI has been strong, services PMI has been strong, that is backing up what the Bank of England said, that the economy will rebound and grow again in the second quarter of the year. And with low unemployment, wages are expected to rise. And as I've said, we know how wages affect the economy, affect the spending, inflation. And now we may start to see the pound start to climb higher as markets start to expect a rate hike in May. So if this is the case, traders, we could start buying the pound against the dollar, but less against the dollar, because we know that the central bank in America is raising interest rates. But for sure, I want to be buying the pound against other currencies, such as the Aussie dollar. So I said today, traders, if we get a break outside this recent range that we've been in, this little box, as you can see, price hasn't been going anywhere for the past 10 days. We've just been trading sideways. But if tomorrow, when the markets open and the US markets are back open, if we get a break above this level, I want to be buying this currency pair. I want to be holding it all the way up to the upside, and this will give us a nice trade as markets, again, as I said, traders will start to price in the expectation of a rate hike. And this is what was making the pound climb higher against the dollar in early 2018 against the Aussie dollar across the markets, because markets were pricing in rate hike expectations. So we closed New Zealand dollar, US dollar earlier this week, and we made a good profit. But again, traders, if markets start to price in a potential rate hike, then we should see this currency pair start to push higher again. And if we get a break above the band of resistance that rejected price, as you can see, traders, last time we came up here, the last few times, heavy selling came in that market, heavy selling. But if we get a break through these levels, this is what I want to wait for, because this is a major resistance. I don't want to be buying a currency ahead of a major area where heavy selling comes in. But if we push through this level, because markets start to price in the rate hike, then this could be a perfect opportunity to buy the currency and continue the uptrend for this currency pair, which would be really good, traders. So we want to see a break above this level, but I do want to be buying the pound against the Aussie dollar should we break out of the range. I also want to be buying the pound against the euro tomorrow, potentially because markets will be pricing the rate hike and we can get a good trade down to the support level at least, so offer us 100 pips. And then also, I do want to be buying the pound against the Japanese yen and Swiss franc. But as I've said, traders, we know there's still a lot of safe haven demand for the currency. But I do expect the pound to start climbing. So potentially we could take a buy tomorrow. And that will give us at least 200 pips from current price to the upside. Again, only risk being the Donald Trump and Beijing situation. But we could wait actually for these currency pairs such as the yen and Swiss franc. We could wait for prices to climb higher, break past these resistance levels that will be coming up to like 148. And when we break through these levels, that's probably more of a double confirmation for us that yes, the trend's starting, and then we can expect the pound to climb higher and we can make some good trades. Again, I am interested in buying the pound against the Swiss franc. Also, again, look, we've seen the pound climb higher today, so this could be a really good trade. I am tempted to get in, and I do know the markets will really start to buy the pound in the expectation of rate hikes coming, so this could be interesting as markets start to price this in. So I think I'll make up a decision on what we're going to be trading tomorrow. Maybe it will be the pound against the Aussie dollar, and we may short euro pound, and then maybe we'll take a cheeky trade for the pound Swiss franc. But what we'll do, we'll have to just put up a big stop loss and have a big take profit target, because if there is a rate hike, remember traders, 5% will be priced in. So from current prices here, we will be looking at price to rise quite a long way at the moment. We could see price come all the way back up here to price in a rate hike. And we must remember, traders, remember I said in May, markets didn't expect a rate hike and then they sold off the pound. It went down by 5%. And now if they do expect a rate hike, traders, the pound's going to go back up by 5%. So with a 600 pips profit target, if markets really start to buy up the pound, you can have a stop loss of at least 150 pips. But remember, even if as long as we're using 2% risk management, it doesn't matter how big your stop loss is, your maximum risk will always only be 2%. So this will be a really good opportunity for us to trade these currency pairs and get in the market. So traders, we're bullish for the Canadian dollar and we're bullish for the pound for the expectations of interest rates going up. And this is really good opportunities for us to trade these currency pairs. And I really look forward to getting into the market and trying to get some good trades. Any questions, traders, please shoot me a message. I hope you have a great evening and I look forward to trading with you all tomorrow. Thank you, traders.